Hey, what's up, everybody? It's your boy Drew, and I've got another good one for you today. So, this is just going to be a little weekly update. I mentioned a couple weeks ago that this year and for the rest of this year, A, until I run out of money, or B, 52 weeks, I am going to purchase the VOO and the VOOG. And I said I was going to attempt this strategy considering that a lot of average investors state that you should just buy into index funds and let your money grow, and that over time with compound interest and everything like that, that you should outperform buying singular stocks. And so I was going to give that a try this year. So I wanted to give an update to the portfolio. I sort of call it the YouTube portfolio. It is my portfolio. But I figured I would give a little update because I know I didn't post a video about that last week. And so I'm going to hop over there as well. I have purchased a few singular securities as well, just due to the time that we are in right now, that I figured with the market bleeding as bad as it's been bleeding, I could put some positives into my portfolio. And my portfolio hasn't been as diverse as it was obviously back in December, but that's only because I needed money on the sideline, because I do foresee this year being highly volatile. But with that being said, let's jump right on in. Okay, cool. So what I have here is I have a spreadsheet with all the current positions that I own. I have an IRA, even though I need to change that from mutual funds to an IRA, and then all my stocks, and these two right here, which is my index securities. And so in that case, I went with Vanguard's S&P 500 index, which is the VOO, as well the Vanguard Growth Index. Both of these mirror the S&P 500. This just mirrors the growth side, or growth stocks. And so with that being said, I did purchase this week and last week. I am now up from 4 to 6. Currently, I am down 3 and 4% respectively. And I know this looks bad, but over the long run, with me constantly buying in at lower price points, when this does eventually go back up, I should be able to carry up a lot more than if I just made a large initial investment up front and just left it sitting there. Because if I just leave it sitting there and I'm not dollar cost averaging in, I am literally just riding the negative and then waiting for it to get back up to that point and then exceed that. So when you dollar cost average in, you are buying at multiple points to hopefully lower your dollar cost average. And in this case, when I started out purchasing, I believe my dollar cost average for the VOO was roughly, I want to say around 400, and the VOOG was right around 260. In either case, dollar cost averaging in, I've been able to drop $6 off of that, and roughly $6. I mean, it's pretty much $6 both ways. And even though I'm negative, it's going to look a whole lot better in the long run. And that is something I want to touch on real quick. The markets are going to be red. They're not always going to be green. Unfortunately, it's not the case. And like in 2008 with the Great Recession, we were red for, if I'm not mistaken, for quite, I believe a couple years, if not 2 years. I was not investing at that time. I was still just a measly little youngin'. But with that being said, it did go back up. And in this case, even if it goes down, I am prepared to continue to dollar cost average in, because just like all the markets throughout time, generally they go back up. Now, there are cases if you're a trader and you invest in penny stocks where you might hit zero. But in most cases, if you stick with it long enough, it will go back up. Prime example, when I did start investing, this was a long time ago, I'd say back in 2010, I was just roughly putting in $50 a month no matter where the stock price was on General Mills. And that was the only stock that I was purchasing through Wells Fargo share purchase plan. And it got all the way up to $70, the highest that it had ever been. And then it dropped all the way back down to, I want to say, $30. And it took me about 3 to 4 years to get back up to where I was able to break even. But the point of that is I was able to break even and ultimately exceed where my share price was because of that continuous dollar cost averaging in, and over time, they do go back up. Okay, so without rambling, as I know I have been doing, just please remember this is the Average Joe Investing channel, so I am pretty average and I will run off at the mouth sometimes. But with that being said, I did want to point out a couple that I have purchased. So obviously, we all know that the price of oil has skyrocketed. We are at the highest that it's been since, I want to say, 2008, if I'm not mistaken. It might be sooner than that, but I believe it was 2008. And with that, I wanted to ride their wave. Normally, I don't trade, and I'm willing to hold on to these stocks only because they pay dividends. And what I do is I reinvest my dividends. So even if these stocks go down over time, those dividends reinvested will ultimately lower my dollar cost average if they do drop below. But long story short, Warren Buffett's been big on the energy sector for most of his career and has made it big off of them. And so with that, I decided to buy XOM, which is Exxon. I bought it for 86.41. That was the start share price 2 days ago. Bought 13 shares, roughly around $1,000 invested, and I made $17. Whoop whoop. As well, today I went with Shell and BP. Shell, I bought at 53.45. It's currently 52.94, and I'm down about 1%. As well, BP. Now, unfortunately, I bought these later in the day. I don't want to say it was an impulse buy, but the time in which I purchased it was definitely an impulse buy. I didn't want to miss out on any more potential gains for today, and obviously I did. But BP I bought for $29.84, and I'm roughly down 0.3%. Am I upset about it? No, because in the long run, as long as this war is going on, as long as there are inflation fears and expectations, I do foresee oil to rise. As well, I want to say it was Shell, and this is not good business practices, but unfortunately, I do believe Shell was the one who came out and stated that they were going to continue keep the rates where they were for oil, and that they were going to take the profits and store them so that they can continue to pay out dividends to their shareholders. Do I agree with that? No, but oil, unfortunately, isn't going down anytime soon, and I figured with all the red in the market, it was a way to balance out my portfolio, which in most cases, as you well know, if you're buying singular securities, you do want to balance out your portfolio. Yeah, so it's not as balanced as I would like to have it, but I do want to have enough market money on the sideline to be able to buy back into my balanced portfolio when I do feel it's right. Okay, so I've rambled for a little bit, but I also wanted to go over my last video. I went over how I look at a stock and exactly why I decided to buy into oil today. And so I pulled up all three, and right here you can see I have BP. In the day chart, it finished green. I probably bought right around this point at 2 o'clock, and obviously I finished below. But this is the point that I wanted to bring up. So I wanted to come to the max. Now, when I use Fidelity, they give me a 10-year view, which I like a lot. And I'm looking at this, and you can see that this has been a pretty flat stock for roughly 20 years. But with it being flat, I'm well below its baseline for where it normally resides, right up in here at this line at around $40. And you can see this over 20 years, it has hit or stayed roughly at or above $40 for roughly 20 years. And that's why I decided to buy, because it's still low enough that if it does get back up to that flat line right there at around $40, I've made a profit. As well, the dividends I will allow to reinvest and will continue to add to my share ownership within the company. And that's why I decided to buy, because over time, oil, unfortunately, isn't going anywhere at this point, and until it does, it's still a rather good investment because we need it. There's still a ton of gas cars out there. Energy sectors need the oil, and it's just unfortunately where it is. I'm not saying green or no green. I'm just saying it's here. It's not going anywhere. And so I saw an investment opportunity. Obviously, I would have loved to buy right around here and during the COVID crash, but unfortunately, that was not on my mind then. And same thing with here. If you look at all these stocks, they are pretty much the same. This would pretty much have a 60 on or above baseline, and I'm below it. And I figured, okay, ride the wave, $8 a share, and then have my dividends reinvest and continue to have that passive income off of it. And then last but not least, I have ExxonMobil, one, if not the largest, if I'm not mistaken, here in the US. Shell, I believe, is English in London. And this is right around its peak. But I figured even if it did drop to, say, right around $69, I could continue to buy, put in another 1,000, and be roughly right in between dividends reinvested. And so this is an oversimplified view, but it is one that has worked for me for quite a while. As well, just like I've stated in all my other videos, I buy in things that I know or buy in things that I purchase. Exxons are everywhere. You've seen them everywhere. You've heard about them. It's not an industry that is going anywhere. And same thing with Shell and BP. And so continuing on with my average investing strategy, if I see that there is a trend line over a certain number of days or years, and I see that there is an opportunity for me to get in, I will attempt to get in. And so hopefully seeing this rise a little bit higher would be great and balance out the portfolio, give some positive to my consistent negatives. And that is exactly why I bought into these today. So once again, I am not a financial advisor. Make sure any financial decisions that you do, you speak with your FA or CPA. I am not that guy. But this is just giving you once again, a little more insight into what I am purchasing, how I am purchasing during these times, and just to give a sort of like a thumbs up, like a don't quit on the market yet. I'm still investing throughout this bloodbath, and I'm going to continue to invest. And I know deep down, I know that in the long run, it's going to work out for me because, as I've said before, this is a long game, not a short game. Okay. So with that being said, just wanted to show that I am keeping up to my promise and purchasing once a week, if not more, into the BOO and the BOOG, as well as show you the 3 new securities that I have purchased as well. Please watch my other video because sometime this week or next week, I will be purchasing shares of Disney. I have high hopes for them. And it's one of my top 3 stocks to buy now and continue to buy the dip throughout this volatile market. And with that, I do want to say thank you for checking out my video and let you all know that I appreciate you for watching my videos. If you do happen to watch my video, please smash that like button. Please subscribe. Please follow if you like anything that I have to say, or if you just want to watch me burn for the rest of this year because I do not know where we are going. But yeah, so with that, thank you once again. And let's get out there. Let's make some money. Peace.